想，我發覺我只會願意輸喺你身上，吻喺個身上，係要被全世界知道，發生喺你我身上呢個真相。事實上，我緊張嘅係你我唔係建立喺物質價值上，我相信嘅嘢，相信更加高尚。
Hello everyone, my name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is March 23rd, 2023. 3/23/23. And Bitcoin is surprising a lot of people today. It's not surprising many of us who are understanding what is happening. Many of us who have understood the trend since January 1st as being well-established, a well-established bullish trend. No, it's not surprising. But still, anytime you have a pullback, even in a very clear multi-month uptrend, there will always be people who think that pullback, that retracement, that intra-wave correction is the previous, downtrend resuming or something like that, something weird, okay? There's always going to be people in disbelief of the rally, okay? But don't be that person because it's not very profitable, okay? You can do whatever you want, but if you want to be profitable, understand the trend, okay? And this is really what I want to focus on. This is what I've been focusing on on this channel. Let's zoom out for a second. The whole time we were in this period right here, we were focused on accumulation only because we understood what was coming, okay? So even when you got some moves up and down and up and down and up and down, the focus was never trying to catch these moves out of context, right? I know I don't always go into trading strategy, but I think it's important to emphasize this. Not every crypto YouTube channel, trading channel is going to tell you exactly what they're doing and how they're doing it. Not every crypto YouTube channel, trading channel has a strategy. My strategy here on this channel is to trade high time frame trends. Period. Okay? We can watch and analyze and, try our best to prognosticate on the, smaller time frame moves. But the money is in the high time frame moves. This is why even yesterday, now let's zoom in, when, after the FOMC meeting, so the FOMC meeting happened, or I think the decision was made at 2, and at 2:30, you had the announcement. And at that time, we had this swing failure pattern that went up, and I thought, if you were watching the stream, we were streaming at the time, I thought we were done. We had broken up, and we had retested the top of this ascending wedge, and I thought we were going to hold it, and I was like, okay, there we go, okay? But then towards the end of the stream, we started breaking down, and I'm like, all right, whatever. And that was towards the end of the stream. I don't know how many people stayed towards the end of the stream, but towards the end of the stream, I said, whatever. Why did I say that? I said, we're still bullish, and in order for us not to be bullish, it would take quite a bit. And then I posed the question, how much? What would it take for us not to be bullish? I'm like, I don't know. We'd have to come down quite a bunch. Okay? And that's still true. Why? Because look at what we've done. Okay? Look at what we've done only since March 10th, right? And we come down 7% and everybody freaks out. Not everybody, but a lot of people freak out and say, yeah, that 12K Bitcoin is coming, right? That 5K Bitcoin or whatever is ridiculous. Even 20Ks sounds ridiculous at this point, okay? But what's important and what you really want to focus on, if you really want to make money, and I'm telling you as a profitable trader, a lot of people trade. Not very many people are profitable. And it's not super easy to be profitable. You have to have a strategy. If you're trying to trade in and out every single last move, it's hard to be profitable. I know. I've tried that. I think they say like 80% of all traders are not profitable. One of the reasons being is that all of these moves that you see here, they're hard to predict. They're hard to time. Okay? But you know what's a little easier? These general moves right there. And that, once you get into that wave, once you start riding that wave, it's not that difficult. It's not that difficult. So this is like the open secret. That's basically my focus, and this is how I do my analysis. Obviously, it's a daily show, so we're talking about even the smaller time frames, what's happening there. But you know how I'm trading is, and I keep telling you guys, it's all about riding the high time frame trend, right, which is clearly up. If you guys haven't noticed, right, this is a retracement that's very clearly a wave 2 to this wave 1. You're in an Elliott wave impulse. You're in a motive wave. This is like the gift that keeps on giving, if only you will accept it. Okay? So let's zoom back into our present day, so what we're doing now. This is quite simple, guys. All of this right here from the bottom of this right shoulder of this inverse head and shoulders, this is wave 3 starting. Wave 3, what do we know about wave 3? It's the most intense, impulsive, typically the longest of the Elliott waves. It's that simple. Zoom out. And then once you zoom out, do a high time frame, highly probable or high probabilistic analysis, and then let that inform your low time frame analyses. That's it. It's that simple. If you want to go backwards, you're going to be of the 80%. It's highly probable, highly likely that you're going to be in the 80% that are not profitable. They trade in and out, and sometimes they win, most of the times they lose. You got to be smart about this. You can't overreact to these little moves that we get. Yesterday it was 7.5% drop. That's relatively small compared to what we've done since March 10th, which is put in a 50% move to the upside. Do you understand? Like, you have to really keep your head on you, or keep your wits about you, rather, in order to be profitable, to make it in this game. All right, enough about trading strategy. I just felt the need to mention that just because it came to mind, and I understand that sometimes people are looking for every last move. Like, if it's going up, I need you to tell me. If it's going down, I need you to tell me. And down 7%, I would say it's significant, but within the context of the trend, it isn't. And yesterday, I didn't foresee us going down 7%. I did foresee some volatility, but if you asked me 7% volatility, I'd be like, nah, I don't think so. Okay? And I was wrong, but the beauty about having a high time frame plan and expecting volatility in those moves, right? Like, because it doesn't go in a straight line. Wave 1, wave 2, wave 3, it doesn't go in a straight line. There's a bunch of this. And let me tell you, trying to figure out exactly all of this stuff is a losing effort. That's why 80% lose. And you do not want to do that. Do not get lost in that. Figure out the general trend and find a way to get in those general trends. You will make life-changing money. I'm speaking from experience. I'm absolutely speaking from experience. I just looked at my P&L for the whole time I've been trading, and I'm a profitable trader. And not only that, I'm super profitable when I'm trend trading. Okay? When I'm scalping, not so much. Okay? That's a skill, and some people are really good at it. Fewer are good at scalping than you would believe. And I know it's sexy because it's fast money, and you call all the moves. So people want to know. If it's going even a percent, I want to know. And if you can't tell me, you can't analyze. You suck. I thought that. This is why I'm addressing this, okay? Because I don't know the context in which people consume this analysis. I don't know what you think. What you think this is. I don't know what you think this is. So, enough of that. Yesterday, and I guess to segue, I was saying before, like a few shows back, I don't know how to count this and I don't care. I don't know how to count this and I don't care. It's like, I know there's an impulse in here somewhere, but I really can't be bothered to count it, and it's hard. there's too much variance. But here, now that we have more data, and this is a sort of a clarifier, this is something that elucidates everything, right? These impulses within the counter trends elucidate everything. Now it's very clear that this all was a flat correction, an ABC flat correction, okay? So here I've got my typical analysis that I share with you guys every day. Using Elliott wave theory, how do we know what's a wave 1 and a wave 2? Okay, very simply, you count 5 waves up, right? And you count 3 waves down. If the 5 waves take about as long as the 3 waves down, you more likely than not have a wave 1, wave 2 situation, and that's exactly what we have. About 3 days up, about 3 days down, okay? And why is it a wave 1, wave 2? I thought, Dean, you were talking about this being wave 1, wave 2. Let's go on the 4-hourly time frame. Guys, if you're getting value, please like, share, and subscribe. So a lot of people are probably asking, I thought you said this was wave 1, wave 2. It is. It's a different degree. Think in terms of Russian dolls. Think in terms of like a higher degree to lower degree. This is a high degree wave 1, wave 2. And then within wave 3, you're going to get a wave 1, wave 2, wave 1, wave 2, wave 1, wave 2, wave 1, wave 2, and 3, 4, 5. And then 3, 4, 5, and 3, 4, 5. Do you understand? It's going to be like a Russian doll building on itself. This is the higher degree wave 3, but in this wave 3, you also have wave 1 through 2, 3, 4, 5. And within wave 1, 2, 3, 4, 5 that I just listed, you have wave 1, 2, 3, 4, 5. It's completely fractal. So don't let it get you confused. I am not naming precise degrees when I'm saying wave 1, wave 2. I'm saying a wave 1, wave 2, because all that's important right here in this analysis is that you're an impulse and that this correction was in context of the impulse, okay? So this is why we're so bullish. This is why yesterday's dump of 7.5% on Bitcoin, yesterday's swing failure pattern after the announcement of the basis point raise or whatever it is, this is why it's bullish, because in context, Bitcoin basically just finished correcting this impulse. And if you finish correcting the impulse, you can resume the larger trend. Okay, what else is bullish about this? Remember yesterday I was talking about how the 21st of March was a new moon, and on the new moon, typically we expect a market to reach a local top. From 0 to 3 days after a new moon, we expect a local market top, okay? And I told you I've been telling you since Friday, I believe, last Friday, that I expected for us to hit 40K or 30 to 40K before retracing for that new moon retracement, okay? But what happened? We did that down here with just a simple run-of-the-mill 7.5% retracement. That's really bullish because we pretty much got that retracement, that new moon retracement, as you can see here, I just turned on the indicator, new moon retracement out of the way. That means for the next 2 weeks up until the next full moon, we can pump and then retrace and then pump again. Do you understand? So it's very bullish. Very bullish. What the markets have done, it's hard to perfectly predict, but you don't need to perfectly predict every last move of the market. I hope this is very clear by now. You do not need to predict every last move of the market to be really profitable. Nor do you have to say it could go up or down and hedge till you die, right? You do not have to hedge to be profitable in the market. You can definitely, surely make prognostications. You can make predictions. You can and you should make predictions, or else you don't have any conviction with what you're trading. Okay, so that's pretty much my take on trading. That's my take on what happened yesterday with the dump and why, in context of everything, it's as bullish as possible. Now, what happened after? Okay, the chart's also telling you that it's very bullish. There's nothing bearish about this. Look at this. This is the recovery. You do not not ever get a recovery like this in a bear market. It just doesn't happen. Okay, in a bear market, let me show you what happens. You get a downtrend. It's established. Okay, the retrace goes maximum to the first initial break of structure will target wave 4 of the previous trend, and then maximally the entire retracement will go to the phi ratio, the 0.618. It'll stay under the 0.618. Why? Because trends respect the 0.618. Okay, so here the price action is telling you this is not a trend, guy. This is not a trend. Like, I'm not with him. This is just like, my local retracement. The trend is actually up. The 0.618 was very, very sort of summarily dismissed. Okay, and you can see that throughout the market. There's Litecoin, for instance. It was one of the fastest ones to recover on my watch list. It recovered almost immediately. Okay, and it had gone down considerably. Well, did it go down considerably? Let's see. Okay, so yesterday, FOMC meeting. Yesterday was... Okay, it didn't go down considerably. It went down a little bit. Okay, it went down a little bit with everything else. But then, boom, immediately. And, I usually say, a lot of times, you look at altcoins, you can see trends in the market. Something Bitcoin hasn't yet done. You can use them as indicators. That was a massive recovery. Why? Because it had always been bullish. That retracement was not a trend being established. It was just a correction finishing up for the actual trend to resume. Okay, and this is why throughout the week I've been saying, okay, these charts look great and bullish, and we look like we are going to resume our trend at any point, right? So that's Bitcoin. This is our recovery. Right now, on the smaller time frames, so 15-minute time frame, you can clearly see what we're doing, okay? We're putting in some sort of impulse to the upside. And let's see if this is a pure impulse or not. I'm going to take the Fibonacci retracement tool. We're going to measure the time it's taken to go up. It's about an hour and 15 minutes. Time it's taken to come down. Two hours and a half. Okay, so to me, this is not a pure impulse. It's one of two things. It can be a wave 4 or it can be a zigzag. If it's a zigzag, we have to come down back to the $28,000 level, because zigzags retrace minimally to the 0.5, maximally to the 0.618. If it's a wave 4, it's just going to hang out here. It's not going to break the 382 because wave 4 typically stays within the 236 to 382 retracement, and then it's going to continue for wave 5. Either way, you're impulsive, whether it's correctively impulsive or purely impulsive, and you're going up and you've recovered already 100% of that downtrend that you experienced during the announcement of yesterday's FOMC meeting. So, if you're not bullish on Bitcoin yet, what are you waiting for? It's quite clear, and this was the title of yesterday's live stream. This move is clear. This is why we said that, because even in the face of a drawdown, you can see the strength of the trend. Okay? Always want to pay attention to the strength of the trend. The trend is everything. This 7.5%, it's fine. It's great. It's a big move. Hard to catch. It's a flash crash. But you know what's even better? 100% since January 1. Okay? Bitcoin's quite literally doubled since January 1. That's better than 7.5%. And it's more predictable. Very few traders caught this. Hard to catch these swing failure patterns. You got to be setting your alarms, watching the price action. It happens so quick. It happens in the blink of an eye. But very quickly, it recovers. So you have to take profit quickly. It's not a this is not what you trade. This is what you trade against, or guard against, rather. So risk management is pretty much everything. Even if you're long, you have to always anticipate drawdowns and anticipate maximal worst case scenario retracements where you're not shaken out of your position. I'm assuming you're trading leverage. If you're trading spot, whatever. But if you're trading leverage, you have to do all of that. So this is the only thing that concerns you. You have to play defense, and you have to learn how to play defense. You have to learn how to hide behind the phi ratios and all that stuff. But that's another topic for another day. Okay, so that is Bitcoin. Let's look at the fear and greed really quickly. So yesterday I mentioned that the fear and greed was relatively high. We're in the 60s, mid 60s, and that small drop of 7.5% took us back down to the high 50s. Okay, so that's something. But to be honest, I don't really use the fear and greed. I just show it just because, But to be honest, in a trending market, just like the RSI, just like the stochastic RSI, do not be surprised if this metric, this indicator, stays overbought for quite some time. Okay? It can stay heated. It can stay in the greed for a while. Just because you're used to saying, oh, it's greed, so I need to sell. You will do yourself a disservice if you sell in a trending market, because understand, in a trending market, indicators are they're overheated, okay, because the trend is so strong, right? Let's also look at Bitcoin dominance. As we've been seeing, Bitcoin dominance is topped out. It is at a local resistance, at the larger resistance of this channel that we've been in, right, since 2021, so about almost 3 years now. And you can see that we're putting in some sort of consolidation reversal, specifically a distribution channel, right, somewhere here. So that is important. But alt season has already started, given the fact that Bitcoin dominance is at a high time frame resistance. Okay, so that is Bitcoin dominance. Now let's look at the DXY. Now the DXY, as you guys know, during the stream yesterday, we watched it put in this massive move to the downside. Okay, this is not something you see every day. The DXY doesn't move that much, right? It's not something that moves like a low cap altcoin. Like, it's literally, it's the largest. It makes Bitcoin look like a micro cap. Do you understand? So you're not used to seeing large moves. DXY is used to moving very slowly, very methodically. Okay, because it's so large. It's the U.S. dollar, right? It's the US dollar, so it shouldn't be moving that much. It shouldn't be that volatile. But yesterday, what you saw is probably the largest move I've ever seen with my eyes on the DXY. The move to the downside, remember, means that the dollar's losing relative strength. Okay, if the dollar loses relative strength, that means risk on assets, Bitcoin, cryptos, gain in relative strength. So irrespective of what you see in the smaller time frame, this move now shows you and tells you that there's a lot of liquidity, there's a lot of relative strength that's being pumped into the crypto markets. So you should have expected on the basis of this move, a massive move in crypto. Whether we got the immediate short-term drop or not. Do you understand? Because this basically shows that because the relative value of the dollar's dropped, then the relative value of Bitcoin and all cryptos have risen. And it's going to show eventually. And remember, the DXY to Bitcoin relationship is a high time frame relationship. So sometimes you see it immediately on a small time frame, but generally speaking, throughout history, since 2014, I believe, we've seen it happen on the monthly time frame, that they're almost mirror opposites, meaning the DXY goes up, Bitcoin goes down, DXY goes down, Bitcoin goes up. But on a high time frame, okay? So don't think that just because it happened on the 5-minute time frame or the 15-minute time frame, immediately Bitcoin should respond. Sometimes it does, but it doesn't always. All right, so that's the DXY. Now back to Bitcoin and what we can expect from altcoins. So we can get rid of this because this point has been made. Now, what is next? Okay, what can we expect down the line? Well, given that we have a wave 1 and wave 2, very likely, okay, everything's probabilistic, but very likely that we have a wave 1, wave 2. We count 5 waves here, and there are 5 waves in which we have a wave 1, wave 2, wave 3, wave 4, wave 5, all following the general principles and relationships, Fibonacci relationships, and the ratios that we can expect, we should expect. The retracement of all of this stuff is also expected as we have, let's see, a retracement down to the golden pocket. You can see right here. This ABC retracement comes right down to the 0.5 Fibonacci retracement level, which is typically where you expect wave 2 to come down to, between the 0.5 and the 618. Everything fits. Everything works perfect. Okay? The time, the price, everything. The shape, right? The relationship between wave 1, wave 2, the relationship between wave 3 and wave 4, all measured to be perfectly what you expect. The relationship between inverse wave 4 and wave 5, the relationship between wave 3, retracement wave 4 and wave 5, it's all there, okay? I'm not going to go through all of those relationships. If you know Elliott wave, you know exactly what I'm talking about. But this is what we do to confirm wave count in Elliott wave analysis, right? Good Elliott wave analysis isn't just like, it looks like this, so I'm just going to put this. No, you can confirm it with high probability guidelines and things that we see time and time again. Given that we have a wave 1, wave 2, we can project wave 3. So let's go on the 4-hourly time frame, zoom out a bit, and take our Fibonacci extension tool from the bottom of wave 1, which I'm going to have to find again. I think it's... Damn it. All right, let's find the bottom of wave 1 on the smaller time frames and then zoom out. Here we go. Okay, so wave 1, top of wave 5, retracement of wave 2, so this 3-wave flat correction, okay? So what do you know? We have, okay, let's do that again. Did I do that right? Did I do that right? Let's zoom out. Let's get rid of this. Okay, I took the bottom of wave 1, top of wave... So bottom of wave 1, top of wave 5, retracement of wave 2, orthodox low. Okay. So minimally, we can expect Bitcoin to come to between the 1618 and the 2 Fibonacci extension. Okay, just from this projection. But again, this is just a run-of-the-mill projection for wave 3. If you get wave 1, wave 2, wave 3 typically projects between the 1618 and the 2 Fibonacci extension, which would be between 32 and 34,000 on this in this projection. Okay, so that wouldn't be out of the ordinary. But again, wave 3 can be extended, and because we're in a bull run, extensions are not the exception. They're more like the rule. So I wouldn't necessarily close my eyes and set a take profit at the FI ratio at 1618. That would be silly. Just let it ride. But don't be surprised if the target for the next move up for Bitcoin, given this analysis, given this wave 1, wave 2 situation, is 32.9, between 32.9 and 34.6. Okay, so that's what is expected next. And as you know, these corrections take a while, right? Corrections in price action always take their time. Impulses happen in the blink of an eye. Okay? Impulses happen in the blink of an eye, and if you're not there, already exposed, you're going to miss it because they happen so quickly. They happen oh so quickly. As you can see, even in this instance right here, we just started going up. And this is a 15-minute candle, boom, from 27.4 all the way to 28. Just in about 15 minutes. And then we finished out the move. But the bulk of the move happened in the least amount of time. This is what you can expect as well. This is why people who are saying, well, these high time frame projections for Bitcoin and all these other cryptos, they're impossible. There's no way. You'd be surprised. Once it starts running, it will have run its course, and then you'll know that it's run. It's not going to just take its time. It's going to just fly. But most of the time, it's going to be in correction. This is why we use the corrections as in order to understand what's likely to come from them. We position ourselves using the corrections to take advantage of the impulses, right? The cause is used to interpret the probable effect. Okay. So that is what I see with Bitcoin. I didn't mention this, but obviously in the DXY, do expect a minimal push up because this gap needs to be filled. And you know how the DXY is. It's not like crypto. We're always filling gaps here. The DXY always fills its gaps. So this should come up here. And this whole thing should be some sort of... It should be some sort of... I'm not exactly sure, actually. If it comes up here, what is this? Okay. Probably some sort of zigzag. That's the only way it makes sense, right? Either a zigzag or a flat, but more likely than not a zigzag because this was impulsive. So I'd say that this is something like... Probably a 333, something like that. Okay, so you come up here and then you pivot and then you continue down. That's what I'm seeing. Okay, so yeah, do expect the move in the DXY to come up a little bit, and that is going to represent probably our final push down to complete whatever correction is happening here with Bitcoin, which I think is more likely than not a zigzag, right? It's probably going to come down a little bit more, probably to between that 0.5 and 6.8 before continuing up here, right? So at this point, I think we can look at some altcoins, and yeah, just call it a stream. Okay, so Cardano had put in a very nice, let's see. Yeah, that was yesterday. Okay. So Cardano had put in a very nice wave 1, wave 2 situation as well. Okay, I think this is 5 waves up with a concerted 5th wave. And then this is your A, B, C correction that happened with that FOMC announcement. So again, you have really strong moves. This was really bullish because you basically with this confirmed the impulsiveness of that. Okay, you're basically saying the chart's telling you we're not just going up, making higher highs and higher lows. We are actually in pure impulse, where we're putting in these Elliott waves that should continue to go up, given that that's what they do. So this is wave 1, wave 2. You're going to start wave 3 if you haven't already, because you're putting in 2 degrees of AB basing and a pivot, and then you just start going. So don't expect this to cool off anytime soon. On a higher time frame, you should probably be looking with the hourly. Yeah, on the higher time frame, all that was a retest of this right here, this cup and handle. You retested the support or the resistance of this cup and handle as support, and so now you're off to the races. So that's Cardano. Guys, if you're getting value, please like, share, and subscribe. This is Algorand, okay? And here we saw that this zigzag, so I've been pointing this out, 5 waves up, 3 waves down. This zigzag pretty much continued, okay? I was under the impression, and I think I said this during my analysis yesterday or 2 days ago, that this was the end of the zigzag, okay? 5 waves up, 3 waves down. I was saying this is our running flat, but it happened to be this right here. But at the end of the day, you didn't do anything too crazy. But for one asset in my watch list, nothing really was too crazy. You're basically holding support, and even in that one Tron, you held support. It's just the move was massive. The candle on Tron was like a 10% candle, I promised, in 2 minutes. I've never seen anything go so fast. It was so fast. It was so fast. But you know what I did? I got stopped out, and I took the opportunity, I want to emphasize, I use that very, very purposefully, deliberately. I took the opportunity to increase my size. I bought more. I was like, oh, okay, cool. You know? I didn't guard against the downtrend as well as I should have. Made a mistake. That's fine. But I bought more. Okay? Here. 5 waves up, 3 waves down. You can see this is what you kind of want to study and get your eyes used to. This is a flat correction. You would call it a complex correction. Why? Because you can see here in the middle of these two, which are your A wave, well, you can call this your A and C, or actually more accurately, this would be your W and your Y, right? Your initial break of structure, 3 waves. But these 3 waves, this is your X wave, okay? And because in the middle of your flat correction, you have another flat correction, this is what makes it a complex correction. I didn't know this when I first started studying Elliott wave analysis, and I don't think anybody explains it this way, but this is what I've come to, the conclusions I've come to over time, over, tens of thousands of hours, studying this stuff. That's why it's called a complex correction. You don't want to call this an ABC correction because this B wave is composed of another B wave in and of itself. Does that make sense? So anyway, yeah, you've got your WXY, your double 3, and this is your support that you're holding and you're still holding. And once you hit that, you started doing your 2 degrees of AB basing in a pivot, your consolidation, absorption of this supply, okay? And now you're off to the races. That's it. It's an opportunity, okay? But the general analysis still stands. And the general analysis is that you're in a zigzag, which is 5 waves up, 3 waves down. Expect an impulse. This is why you want to look long, and you want to expect long. You want to expect higher. Even that move, I don't know how much this was, but that shouldn't throw you off and make you believe that you're going to break support and look for lower and go into another bear market or something silly like that. Okay, so that's Algorand. Arweave. So Arweave pretty much kept its running flat, like we said. So this, I want to say that this is 5 waves up, 3 waves down, 5 waves up, 3 waves down. I want to say this is a double zigzag, not a running flat. I want to say it's a double zigzag. I think it's 2. This is, it can be a running flat. Yeah, let's keep with the running flat. Simple. It's more simple, and I think Occam's razor, the simplest explanation is more likely than not the most accurate. So here, I think you still have your running flat. This is your A wave. This is your B wave. This is your ending diagonal C wave. And so, what did we see yesterday? Yesterday in the FOMC meeting announcement, we got this move here, which was nothing. It wasn't part of this impulse. All of this is part of your rounded bottom consolidation reversal. So this is your initial break of structure. This is your a counter to that initial break, right? You just basically put that in. Nothing more, nothing less. You're putting consolidation reversal patterns. And so yesterday, that was basically the impulse of your B wave to this A wave. That's how I'm seeing it. Let's turn on our momentum indicator. Okay, it looks like it's almost finished. Okay, so that's our weave. Okay, blur token. I was saying yesterday how we have a rounded bottom, and rounded bottoms typically denote bottoms. Rounded top typically denote tops. And even in yesterday's drawdown, you maintained the integrity of your rounded bottom. Very important. In no way did you break structure. And subsequent to that, you put in some consolidation reversal. So you're still, nothing's changed essentially. Nothing's changed essentially. Reason, just a note on strategy. Reason I have an alarm here is because this position got stopped out but in profit, so I had to get back in. I got back in, and I added a substantial amount of margin to protect against any downside. You always want to do that. Risk management is everything, okay? It's not just about getting in, but it's about protecting against the worst case scenario, drawdowns, right? So I did that. But what happens after we breach this point or thereabouts, I can move my stops into profit and take out the margin. And so I de-risk that position and I make it a winning trade no matter what happens, no matter whatever, crazy thing that I did not foresee, I make money. And this is very important because it's not enough to say, I think this is going to happen, I think that's going to happen. You have to execute proper risk mitigation. And proper risk mitigation allows you not only to be wrong, but to make money while you're wrong. Huge, huge. I've made a lot of money not trying to make money in the markets, just being wrong, getting stopped out, and then getting back in because I see, okay, I have conviction in the higher time frame analysis, but I didn't necessarily read the volatility properly, right? The smaller moves sort of confused me a bit. Okay, so yeah, that's blur. Sorry. Bunk. Okay, it's pretty much holding this channel. And what is this channel? You can see you went up impulsively. And actually, to be honest, in bonk, yeah, this looks like part of an impulse where you created some sort of neckline here, you broke out and you're retesting it, and that was another retest of that. And because this impulse seems to start, let's say it starts here. Let's measure that really quickly. And get rid of this. So from the bottom here to the top, Or would it be the top here? No, you wouldn't do that. You would take the orthodox top. Orthodox high is here. Or is it? I'm trying to figure this out. Okay, maybe this is the orthodox top because maybe what we're seeing here is an ending diagonal. Right here. Right here. 3, 3, 3. Right? Maybe? Something like that. 3, 3, 3, 3, 3, 3, 3, 3, 3. It's possible. Okay, if that's the case, then your retracement does meet the criteria for a zigzag. If it's not, then it has to be a wave 4. It has to be a wave 4. But yeah, just basic support and resistance. I would say that this is clearly some sort of area of consolidation. Just like it was to the left, it is to the right. And you have a neckline, and this is your support. This has been your support. So you should continue to the top of this channel, break, retest, and then pop out. And that would be a breakout of this inverse head and shoulders. That's how I'm seeing it. Okay, elite waves aside, just basic support and resistance. You're likely at support here. Putting in this move to the upside here. Yeah, that was likely the end of your move. Okay, dent. Again, you have this running flat. I talked about this yesterday. It's still a running flat. It's not as it is not as emphasized, or it's not as running bullish as it was yesterday, right before this move, but it's still in a sense a strong running flat, right? Because all of this actually is just your consolidation reversal. This is your A wave, this is your B wave, and then you have a subsequent breakup structure. So a secondary A wave, or small A as we call it, and then a small B somewhere here, and then a breakout. Okay, so your running flat did happen, and it was exactly what we showed, but then you have to look out for that B wave. So yeah, this is still a zigzag, and the read is still boom, boom, boom. Sometimes these things take time, but once you start running, it doesn't take much. It doesn't take much time. Again, I have the alarm there so that I can put that position into profit once it breaches that level, and then I can de-risk. And so it's a win. It's a how do you say it? It's a surefire win, I'm taking less risk. If I lose, I win. If I win, I win. That's how you want to play. Risk management's everything. Risk management is everything. And I'll also add that your ability to read these trends in the charts and to make high probability reads, prognostications, predictions is also part of your risk management strategy. A lot of people try to deceive new traders and say, well, you don't want to make a prediction. That's false. You want to make a prediction. You want to get really good at making predictions, because that's part of a great risk management strategy. You want to try your best to make good predictions, but always understand that you could be wrong. And so if you're wrong, what happens? Do you stop playing? Do you lose everything? If you're going to lose everything, then you're not doing it right. Okay, Dodo. What happened yesterday in Dodo? I think this is okay, I've said this before. This is some sort of impulse, and this is some sort of complex correction, but this is essentially a bull flag, right? This is a bull flag. And yesterday you got a drop in the impulsive portion of that complex correction portion of the flag. Dogecoin. What happened yesterday? I think this is the end of, this was the end of the zigzag, or sorry, the end of the B wave for the zigzag. So A wave, B wave, and then here is a consolidation reversal. I think yesterday's dump in Dogecoin was part of your consolidation reversal. That was the impulsive part of your B wave, because this is very clearly right here. Whoops. Very clearly right here, your A wave, and this is very clearly a B wave. And then there's A, B, pivot. That's how I'm seeing it. Same thing with dot, right? I think that was it. I'm not taking this as, you know, a W, X, Y, X, Z. No. That's really sloppy. This is an A, B, C flat correction. That's part of a zigzag. This is your A, this is your B, you know, and then this is a consolidation reversal. And yesterday's dump was the impulsive B wave of that consolidation reversal. That's how I'm seeing it. And now you've got a quick recovery, right? That's it. And you may be already back into pure impulse for Polkadot. Same thing here with DIDX. I think this is the end of that B wave. All you see here, including yesterday's dump, is part of a consolidation reversal pattern. That is A, B, A. Maybe this is A. Maybe you're getting another B like this. It's possible. It's possible. Always guard against the worst case scenario. Always guard against the worst case scenario. Let me repeat that. Right here, this is likely that you have an ABC flat correction, and all you're seeing here is 2 degrees of AB basing and a pivot. Now, it's hard to say exactly the size of the A wave and the size of the B wave, but as it stands now, what we're seeing is this is likely the A wave, the initial break of structure, targeting wave 4 of the previous trend, which we expect. This is likely the counter to that A wave, so we call that big B. Now, is this all big A, or is big A, or sorry, small A, or is small A down here and small B down here? You don't know. But what you should do as a good trader with good risk management is assume the worst, meaning this would be small A, and small B could do something like this, right? Come down all the way to the 1618 of small A, and then you get your pivot and breakout. This is the work. When I say I'm managing positions, I'm looking and doing risk assessment of all my positions and taking the worst possible case scenario to stay alive. You just that's the MO. That's the modus operandus. To stay alive, so that when the price does resume impulse, you're there. You're exposed, right? Obviously, I'm talking to my leverage traders, my my friends that are trading only spot. This doesn't really matter. Okay, you just want to buy relatively low, sell relatively high. That's it. You don't have to be as precise. Okay, Ethereum. What am I seeing here? I'm seeing Okay, I said before that this was likely a wave 4, and I gave the reasons for that. I'm not going to rehash it, but this all was likely a wave 4 retracement. Okay, all one contiguous running flat. I think that what you're seeing here, let's see, hold up, I'm looking at something. All this stuff is, so this is the correction, this is the counter correction. This is the correction, this is the counter correction. This right here, so this is clear to me now. This right here was a wave 1, wave 2 situation. Times are comparable, and the sort of the price relationship is comparable. The retracement down to minimum 382 or whatever, that's comparable. But what you got after that was interesting. All this is connected. So these two are connected, right? But then all three are connected as well. I'm trying to figure out how. This is tricky. Let's try and figure this out. Guys, if you're getting value, please like, share, and subscribe. I'm going back and forth on this because I don't have clarity, and that's fine. I think the first step in figuring something out is acknowledging that it confuses you. Okay, look, this DXY is about to fill this gap. I think it's one quick move to the top of this range, and then it starts coming back down. In any case, back to Ethereum. Let's zoom out for a second. When in doubt, zoom out. Let's get rid of this. Let me take a drink. Stretch a little bit. I'm gonna put my sweater on. 1 second. Okay, sweater's on. I'm stretched. I'm hydrated. Let's go. So looking at Ethereum, let's try to figure this out. So zooming out, I think what we see in Bitcoin is similar to what we see in Ethereum. We've done this analysis, so it's nothing new. It's 5 waves up, 3 waves down. The time it took to go up is the time it took to come down. We come down between the 0.5 and the 618. This is a veritable wave 1, wave 2 situation. Meaning, what we're seeing here in some way, shape, or form is part of a wave 3 trend. We know that means it's particularly trending, so particularly bullish because we're in a bullish trend, and it's particularly strong, so we should expect, running flats and extensions, all that stuff. Okay, now let's zoom in. Now that we have the higher time frame context. So this has to be some sort of impulse, okay? Question is, where is that impulse? Where do you start counting all that stuff? I think you start counting here, only because this cannot be a wave 1, wave 2 situation for a lot of reasons. I'm not going to go into why. So I think you start counting here. So whatever this is and whatever this is, they should be related. Okay, so let's just look at that. Let's first take a retracement of this entire wave. what happened there. Okay, it looks like you got a 0.5 Fibonacci retracement, essentially, which is what you would expect in a wave one, wave two situation. Again, on a smaller degree, because we're at a smaller degree. So let's measure the time just to be sure. So about 1 day, 20 hours up, about 1 day down. Okay, so that already doesn't fit. So that tells me, okay, this helps us, right? This can't be a wave one, wave two. This has to be, whatever this is, a wave four. Wave two is over here. This is wave one, wave two, wave three, wave four. You're expecting wave five. I think I've done this analysis. It's just I forgot it, and I don't mind it redoing it, because sometimes you do it. You don't want to repeat mistakes, and there's no harm in rehashing work. If you can do it once, you can do it again. It's not a waste of time or anything like that. But this is what I'm seeing. Okay, so my hunch in saying that all of this is connected makes sense. All of this is connected in the context of a wave 4. Okay, so this is a massive running flat where you have your A wave. All of this is your B wave. This is your pivot. And this is your 1, 2, 3. Your zigzag impulse to round out this WXY double 3. Okay, so I think this is what this is right here for Ethereum. WXY. And then your rounded bottom starts here. So you have, a big A, big B, small a, small b, probably down here somewhere. And then a pivot down here somewhere. I say that because I believe it's likely that you maintain the integrity of this rounded bottom as a reversal. And that there's enough buying pressure that it's unlikely that you come back down and break this, right? Because, again, we're in wave 3. Likely in wave 3. So I think what happens now is you look at this on a small time frame as a pure impulse. Guys, if you're getting value, please like, share, and subscribe. This is what I do in my spare time. This is how I break down reads and do analyses. High probability analysis. You just go step by step, zoom out, one thing at a time, syllogistically reason how something is likely to be this and not that, or can't be this, can't be that. And finally, you get a clear enough answer. So I think what you're seeing now is this wave 5 of that larger move, okay? So this may be the first wave of that. Yeah. And again, I think this is a type of wave 4. Why? Because it's too shallow of a retracement to be a wave 2. And it's taken way too long compared to your purported wave 1. So that's what I'm seeing. I think you go up a little bit, you come back down, and then you continue to go up. So that's ETH. Let's zoom back out. Chainlink. So this is also a very, very strong. So this yesterday was the end of this really, really strong running flat correction. I hope you guys can see that. This was what made yesterday so bullish, because you could see A or W, right? Again, this is a complex correction. Why? Because the mid wave is not just one straight line, or it's not just a B, C like this, pivot down. It's not one of those. Here you can see complexity where you have flat corrections within flat corrections. That's an X wave, not a B wave. So this is a W, that's an X wave. And yesterday's FOMC dump was the Y, or the conclusive move. to your running flat correction, which is a very strong running flat correction, as you can see. But essentially what you're getting here is a zigzag. W or A, B, right? In the context of a zigzag, you can call this A, B, and then you're going in for C. So chain link is very, very, very bullish right now. That's one of the most aggressive running flats we've seen in our watch list. And here, I just want to note, you're getting really shallow wave 2 retracements. This is likely a wave 1, wave 2 situation, and it looks as if that wave 2 retraced to a minimum 0.382, which you don't typically see. Typically, wave 2 comes to at least a 0.5, but it can go as shallow as the 0.382. I think that's what you got here. That's what you're getting. Let's see. Yeah, and the momentum's all the way back down as you're rising. So this is really, really strong. Link is very, very bullish. Very bullish. Very bullish right now. Do expect it to continue to fly. So that's chain link. Okay, lit. Here you put in another running flat, but it's not as aggressive, but still. And I think it was finished over here. And I think all that you're getting here again is the rounded bottom AB base, right? 2 degrees of AB basing and a pivot. I think that's all you're getting here. Litecoin. So this is your zigzag, and I talked about this yesterday. Your B wave, right? This is your A wave, this is your B wave. This is your consolidation reversal right here. And I think yesterday you pretty much just put in the final leg of your 2 degrees of AB basing and your pivot right here. And then you just started running off on your impulse. So this is your impulse, your C wave that you're putting in right now. So, I mean, don't expect it to stop anytime soon. It's just going to keep going, as we know, because it's an impulse. Is it going to stop a little bit at important resistances? Sure. It's going to probably consolidate at the top of this move around 105. But expect it to continue. So that's Litecoin. It's ahead. I think it's ahead of most other assets. Okay, MOVR. 5 waves up, 3 waves down. We talked about this yesterday. This is more likely than not a zigzag. Again, you have a rounded bottom in your 2 degrees of AB basing and a pivot. I think that, again, your drop yesterday came from the impulse of your B wave. Okay? Of your big B wave, if you want to be more specific. So let's just look at that. But again, you're putting in a round bottom. And here it seems as if this is indeed your A wave, and this all was your B wave, remember your B wave can retrace all the way to the 1.618 or phi ratio of this A wave, right? This is big A, this is big B. Small a, let's assume that small a is like this. Small b is like that. So you're putting in a zigzag. And then you put in a pivot. Okay, and then your impulse starts. That is a very likely read. And again, this is why the market is so bullish, because these 2 degrees of AB base happened and it created that rounded bottom, which people look for reversals. And this is the start of your impulse right here, where you go 5 waves up and 3 waves down. Let's check that. So again, this can't be a wave 2. Why do we know that? It's because the time it took to consolidate is way too long compared to the time it took to go up. But if it stays in this region, we know it's a wave 4. If it continues down, it'll be a zigzag. Or yeah, it'll be a zigzag. Basically 5 waves up, 3 waves down. So maybe this is the pivot, and we counted those 2 degrees of AB basing and a pivot wrong. But we already saw an example where it was more likely than not that where we're at, right, holding that 382 is more likely than not a wave 4, and then we get a wave 5, which will probably be extended. And we should not be surprised to see extensions in a bull run, especially in a wave 3. And that extension will likely be the height or the size or the length, whatever you want to call it, of these heads. You see a bunch of head and shoulders, right? We're at the neckline. You superimpose it from the side of breakout. Expect an extended wave 5 if this is indeed some sort of wave 4 consolidating right under the neckline, right? Expect these assets to run, which would give you something like 8 to 10% from where we're at before finding resistance and consolidating. Yeah, it would put it about here, right? That makes sense. Okay, sand. Okay, now this is, let's see. Okay, so I pulled the fibs, and you can see we're finding support, at least temporarily, at the phi ratio. And it looks like we're finding support at the neckline of this head and shoulders right here. So let's see. Let's see. Just checking my positions real quick. There we go. Let's see. I'm just checking my positions, guys. It's constant management. Like it's a lot of work. I have quite a few positions, and you know, some of them are relatively new, right? Because we haven't run past, you know, these major resistances too much. So, you know, although we're in trend, I still have to work quite a bit. So I'm always managing, making sure everything's as it should be. Let's see. Okay, so I do have this. So I'm looking for support here for sand. Let's see. Okay, let's look at this. So we should expect support at the phi ratio. Is this a wave 1, wave 2 situation? I don't think so. Why? Simply because of the time. If it was wave 1, wave 2, we should expect the retracement to take only an hour. But it's taken much longer, right? As we can see, the retracement has thus far taken about 3 hours, 3.5 hours. So it's unlikely that this is a wave 1, wave 2 situation. it's more likely than not that it's a wave A, wave B situation. More, i.e., this is a zigzag. Okay, and zigzags find support at the 0618. So we do expect to find support. Don't expect it to be a flat correction or anything like that. Let's go on an even smaller time frame and look and see what our momentum looks like. So our momentum is oversold. So there's a likelihood that we do find support here and put in some bullish divergence. So let's look at it. Let's wait for it. So this is Sandbox. Let's see. Okay, looks like we're getting some sort of response, which we expect at the phi ratio. And also, the fact that this is on this support line. So that would mean if we just had to count this again, this was your initial break. This was your initial counter. So this big A, big B. This is small a, small b. And then this would be your pivot. Makes sense. 3 degrees of AB basing and a pivot. And again, I've said this before, but the beauty about Elliott wave analysis and AB basing is the idea that these AB bases don't have to be in an orthogonal straight line. You can have them not even in a proper clean range. They could be diagonal, they're kind of all over the place, right? But at the end of the day, you still kind of get a rounded bottom, which is what you expect. Okay, let's see. Waiting for a bounce here. Is this going to be a flat correction? It should be a zigzag, but it could be a flat correction as well, right? Why? Because this could be a base, a three wave base. 1, 2, 3. It could be like this. So you could be looking for the 786. That's also possible. If it's a flat correction, worst case scenario, you come down to the 6158 level. Okay, let's see. Waiting for the bounce. Let's see if we get it. I'm interested in this because I have a stop right below here, and if I get stopped out, I get stopped out in minimal profit, but I want to get right back in, so I'm waiting for this. I'm watching this just so you guys know. Kind of don't want to execute another trade. I'm tempted to move my stop because I still have some leeway. But I should just leave it. I should just leave it and trust my analysis. It's okay if I'm wrong because I have set my stops into profit. Slight profit, but still profit. It's pretty much at break even. But, you know, there's funding costs and everything like that, which can add up with big position sizes. Let's see if we hold this level. You usually get some reaction at the phi ratio, just like we saw yesterday with Bitcoin. But it doesn't mean just because you get a reaction initially that you're going to hold it. You're always going to get some reaction, but the question is it going to hold? I think this is going to hold. I think this is going to hold. Let me just see one thing. It looks like a lot of other things are kind of in the same situation. Okay, Bitcoin's doing the same thing in the sense that it's retraced all the way down to this phi ratio. Yeah. So it looks like everything else is putting in that phi ratio retracement. And the question is around, or generally, are you going to hold that phi ratio? Yeah. So it's not just sand. This was probably coincident with that DXY filling the gap. And yes, exactly. So remember, we were saying you're likely to get a move up to fill this gap. These gaps in DXY always fill, and that's going to, you know, pretty much be the final move down before you continue your impulse, right? Final move down of your correction. So that's exactly what we got. Okay, so let's go back to. So it's highly likely that we do get a bounce here in sand and in other assets as well. Okay, so let's move on, since this is action-packed now. Okay, so what's it look like in SHIB? In SHIB, this looks like another. This also looks like your pivot. So I think a more accurate read of the AB basing is A B A B. So big A, big B, small a, small b, and then this is your pivot, right? This is definitely a pivot. Can't be a wave 1, wave 2 situation just because of the time. Okay, synthetics did something different. Instead of putting in, so this is a flat correction. This is a flat correction. So A and B were flat correction, small a, small b were flat correction, then the pivot to flat correction. But that's what it looks like. This looks like, this definitely looks like AB based territory. Okay, Telcoin, same thing. A, B, A, B. So that's actually, this is 2 zigzags and then a flat correction. Tron is interesting. Tron is interesting, and this is the one that I was saying put in a crazy move. If you were in Tron, you definitely noticed this massive move to the downside, like 10% in the, like, look at the size of this candle. It's crazy. But the recovery was also swift, right? This is what typically happens. Low liquidity, there's an imbalance in the market, then the recovery is also swift. A, B, A, I think it's... I'm not exactly how to read this, to be honest. Maybe this is A, B... Not exactly sure how to read this. And then this is the pivot. I think your two degrees of A basing and a pivot happened here, I want to say. And then your impulse happened here. This can't be an impulse, can it? Yeah, it can. Yeah, it can. This can be a wave 1, wave 2. And then wave 1, wave 2 of the subsequent degree. So yeah, that's Tron. V-chain. The recoveries here. Here's similar. Flat. Zigzag. Or is this the zigzag? It's tough to read. Tough to read. Oh, okay, here. That's the zigzag. 1 zigzag, 2 zigzags, and a pivot, I think. Something like that. And XRP, I think this is flat. So big A, big B, small a, small b, and then the pivot here. And Zilliqa finally, this is the zigzag, this is the zigzag, and then this is a flat correction. So you have 3 sets of corrections, 2 degrees maybe missing in a pivot. And so yeah, Bitcoin did find some support, at least as it stands, in that phi ratio, that golden pocket, and essentially retesting this broken resistance as support for continuation. Okay, so that's what I'm looking at, and that's why I'm seeing it. This is why I'm still very long. I bought more. We can expect a massive pump in crypto, not just in Bitcoin, but in all these other assets, because we've essentially established a impulsive market structure, and that was confirmed by these corrective patterns completing themselves. Okay, so that's what it looks like. Guys, if you got value, please like, share, and subscribe. I hope that was helpful. I hope that was useful. Take care. I will see you tomorrow.